Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. Nervousness over geopolitical concerns as well as summer vacations put a damper on the mood this week. Markets generally headed higher, but trading volume was light. On Monday, the U.S. ordered airstrikes over Islamic State militants in Iraq, and Israeli and Palestinian negotiators were back at the bargaining table trying to bring agreement to the Gaza Strip dispute. On Wednesday, retail sales for July were released and they disappointed investors. Month to month, they remain unchanged compared to the prior month's 0.2% increase. However, the report helped boost stocks as it alleviated concern that the Fed might have to raise interest rates sooner than expected. On Thursday, jobless claims for the week ending August 9th were higher than expected, coming in at 311,000 compared to the prior week's 289,000. Import and export prices for July showed little change month to month, with export prices unchanged and import prices down 0.2%. On Friday, the producer price index for July was tame at only 0.1% higher month to month as energy costs dropped. Also, industrial production for July increased 0.4% and capacity utilization increased slightly to 79.2%. Markets were up on the news but later dropped due to news of additional conflict between Russia and Ukraine. Now let's take a look at some stocks. GlaxoSmithKline was in the news earlier this week as the pharmaceutical company suffers from yet another bribery allegation, this time originating in Syria. The new allegations were filed after an anonymous email was sent to top management exposing names and dates of certain payments to entice doctors to use Glaxo's drugs rather than their competitors. Macy's shares were down sharply Wednesday after the major retailer released their second quarter earnings. The company reported sales were up 3.3%, while earnings increased by 11% year over year. However, the retailer cut its full year outlook. The lowered forecast was due to the sales shortfall in the first quarter. Amazon.com shares are up again this week after the e-commerce giant released a smart device add-on that allows businesses to swipe their customers' debit and credit cards for payments. Amazon intends on taking a 2.5% fee for swipe transactions and plans to compete with similar services such as Square and PayPal, which currently charge higher fees. Cisco Systems shares were down Thursday after the network hardware provider announced that the company intends on cutting back at least 6,000 more jobs. This will be the fourth major layoff that Cisco has performed in the past 4 years. The company also announced on Wednesday that net income has fallen to $2.2 billion from $2.3 billion year over year. Tecmira Pharmaceuticals Corp. Is one of several companies that might have a possible treatment for the Ebola outbreak currently in Africa, and they've been permitted to use their experimental vaccine on human patients affected. The World Health Organization has deemed that human trials are now ethical in light of the epidemic. Shares of Tecmira skyrocketed on Monday. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.